Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 28th of October, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of November. And across these three major pairs, we've seen all of them still consolidating with some attempt by the euro because of the ECB last week attempting to climb up higher, but then quickly push back down, back into a rising channel, but could also be a bear flag. The pound focus will be this week with the Bank of England and the FOMC. Last week was ECB, and also this week there's also the Bank of Japan. So three key central bank announcements this week. And the cable is still consolidating, now closing in on a triangle. And the Aussie dollar just hanging on. Just hanging on and trying to find support. Critical support here, otherwise it's going to be a major downside after that if it breaks the support. So we'll see if this week there's going to be any major breakouts from the US dollar that could trigger either a recovery from these major pairs or further weakness. And it's a very critical week this coming week now, and as well as some more major news this week. So let's review what happened last week and look forward to this week's announcements. So for this week, the key news will be from these three central banks: the Bank of Japan, Federal Reserve, of course, and the Bank of England, and then leading into the Friday's non-farm payroll report. But looking at last week, the ECB was the first one that announced, and they were expected to hold their interest rate, which they did. But then they could be looking at a pause and potential cuts earlier on, as they did indicate that inflation did slow down in September. So let's see whether that's going to be a critical impact to the euro if it does continue to hold in the next round, as this would indicate that possibility that there could be rate hikes in the early part of next year. The flash PMIs overall Eurozone was slightly lower than expected, while the UK and US did better than expected. And in Australia, the CPI figure was also higher than expected. So let's see how that impacts their next, the RBA's decision next round. And a surprise GDP rise for the US is also could be a short-term impact for the last quarter. So this coming quarter could be lower than expected then. And so it could be just a short-term impact here. While the core PCE price index remained high and came in as expected. So it's this could be an impact or influence to the FOMC's decision this coming Wednesday, where they are not expected to increase or change rates. So they have left it unchanged for the last 2 rounds. So we'll see whether they're still going to maintain that. Bank of England as well is expected not to raise rates, as they could be following the path of the ECB, and if inflation does come down faster than expected, then they could also begin to cut rates earlier than expected. So this could be a potential dovish move or dovish pause. And then on Friday, the non-farm payroll report, lower forecast than expected, which was a surprise for the previous month. So this week is a very critical one with all these 3 major central banks. And Bank of Japan, like, since it has been, the Japanese yen has been weakening quite a bit, there could be some major policy shifts, so to try to strengthen the Japanese yen back up. So we'll see. It's going to be a very interesting week this week, and there'll be a lot of volatility, so do watch out for that. Right, let's go back to the analysis. All right, let's begin with the euro, where early on in the week it attempted to break out from the symmetrical triangle, but restricted by not just the 50 pip retracement here, but also the daily 55 EMA, and then brought back down on the Tuesday straight away. And by the time Thursday's Bank of England's announcement, it had already started to move lower, and then managed to bounce back up after the news and consolidated through the end of the week. So now let's shift this slightly, and it could now also be a channel, a rising channel. And also could be a bear flag. It does break below the support. There's this interim support for now at the 105. Has managed to fall above that. That's the critical recent low. And if it does break, it's still quite open, moving lower. And above that, there is the 38 pip retracement, which is actually the 62 pip retracement, moving back up together with the daily 200 EMA and intermediate resistance at the 107. Okay, let's take a look at the weekly time frame. And it's a spinning top with a long higher wick. So pause for now, and this week will be critical then, with the impact from the FOMC as well as Bank of England's decision as well. All right, let's compare this with the US dollar index, the DXY, and to see whether it's also consolidating in a channel of some kind. And here's the DXY. It did dip below as inversely correlated with the euro, where the EU bounced higher first on broke out higher above the triangle on the Monday and then pulled back into the triangle on Tuesday. So similarly, the inverse relationship with the DXY did correlate here. So it dipped below the triangle and hit the support at 105, bounced back up to climb above the triangle upper trend line, and then pull back to retest it on at 106, consolidating as a doji on Friday. So let's see what this one holds for us for this week now. With could be a larger triangle, or as with the euro, could also be the opposite of the bullish channel, is a bearish channel here, but also possibly a bull flag here, right? With this possible breakout higher, but we'll see what happens this Wednesday with the FOMC report, FOMC decision, and then on Friday the follow-up after that, and whether it supports that move with the non-farm payroll report. And on the weekly time frame, spinning top with long lower wick and a strong bounce back up from the 105 and climbing back above the 106. So let's see what happens this week, and it's potentially could break through and attempt to test the 107. It did hit earlier in the month, and see whether it's going to reach the 200 pip extension, 107.25. And we could adjust the fib, but let's see. Move this to a smaller swing move. Where the 21 pip retracement aligns with the 106. 50 pip extension corresponds with a major support here. With the major resistance at the 107, where the recent swing high is. So let's see whether it consolidates within the channel, or whether it's going to break out one way or the other. There is a major support here at the 50 pip, daily 55 EMA, and recent 105 test. There's more potential support here. Whereas on the resistance side, let's take a look on the weekly time frame again. If it does break out higher, there's a key resistance here at the 107.61. It's not too far above the swing high, 107. So we'll see what happens if it does break the 107. All right, so critical one for this week for the US dollar and its impact to the other major pairs. All right, let's move back to the other pairs. Let's move on to the cable. And from the start of the week, it also attempted to bounce off the support at 121, almost reached 123, but then dropped back into the 121 support, found support, and form a small hammer here. We'll see whether that's going to continue this week. And now it could be also forming a channel, bearish channel. And critical one with the not just the FOMC impact from FOMC Federal Reserve, but also the Bank of England's turn on Thursday. So critical range here. If it does break down, and it's going to go for the round figure of 120. On the upside, there's resistance together with the daily 55 just above the 123 round figure. So we'll see whether it's going to be just a consolidation or a breakout of some kind. But if it does break down to the 120, it's going to be strong support and potentially strong buying demand here. Still interim resistance here, definite strong resistance at the 138 pip with the daily 200 EMA. So this is still an intermediate resistance at the 123.37 area. Okay. On the weekly time frame, the spinning top with a long upper wick, just like the euro. Now, it is possible that we could move the pip down now. Has been I've been using that for a while, and maybe use this swing move down from August. It has a pullback and tested 38 pip retracement. Which aligns with that swing high. So we could remove this. Remove this swing high here, use that fib. Maybe it does extend lower. Still quite a ways to go. And the 50 fib retracement that's aligns almost with the daily 200 EMA. So this could be a new fib that we could use. Okay. So critical one for GU for this week, with key impact from these major news. All right, let's move on to the Aussie dollar. And it's hanging on. Attempted to climb up, tested the 64 round figure, and then dropped back down below 63, but managed to bounce back up and also form a hammer on Thursday. And just hanging on here. Hang on for support. Critical support. It does break below 63. There is critical support at 62. And let's see if this is also, this looks like a descending wedge here. And let's take a look at the weekly time frame. Those are spinning top and bounded by 64 and just below 63. So this week, it depends on the US news with Federal Reserve and the non-farm payroll report. It's, actually the major resistance is above that. We could also update this fib because it's been quite a long time now. And let's see. Can move into a smaller swing. See here, and for now, looks like this could be a potential flip here with alignment with the 62 flip retracement being tested at the end of September. And the daily 55 coming down to the 38 flip retracement. Let's mark the 50 flip retracement and this zone here together with this recent swing high. It's a potential resistance. And below that, if it does break below 62, it could go down further, slightly further. But we'll see. So interim resistance at the daily 55, confluence with the 38 flip retracement, and in the zone with the 64 round figure. We do have a swing low here. So this could be a zone of support, intermediate support. That's critical support there. Okay. So let's see whether it's going to continue to consolidate within the apex of this descending wedge, or where it's going to break out eventually. All right, so critical week for the US dollar and all the major pairs as we await the key decisions from the 3 central banks this week. Okay, so do stay safe, have a good trading week, and cheers for now.